right, moving on, let's talk about something that is reaching new heights almost every day. It's gold. It's hit another all-time high. Now, gold prices consolidated on Thursday, April 4th at above $2,300 per ounce. That roughly translates into about 70,000 rupees. In fact, more than 70,000 rupees for just 10 grams of gold. Now, the story of gold has been incredible, and we did some maths to figure out an interesting statistic. Did you know that back in 1990, if you had 1 kg of gold, you could actually buy a Maruti 800? In 2000, if 1 kg of gold, you could buy an Esteem. In 2005, it would have translated into an Innova. Maybe in 2010, it could have been a Fortuner. 2016, 1 kg gold is BMW. 2019, 1 kg gold, the same 1 kg. Now you can buy a Volvo S60. 2023, 1 kg of gold means you can now have an Audi Q5. It's as expensive as these cars. That's the story of gold. So what should you do? Should you buy? Should you sell? Should you wait? Manisha tells you more.
Gold prices have scaled record highs to above $2,300 an ounce. Well, gold is up $500 an ounce in past 6 months since hitting a low of $1,810 in September 23 and hitting an even lower low at $1,643 in 2022. Well, this year started with almost 2050. We did see a low of around 1992, and since then, here we are above $2,300 an ounce of an all-time high is where gold prices hit it. In the Indian markets, the gold prices hit an all-time high above 70,000 rupees. If you bought gold last year at around 56 or 57,000, you would have been sitting on a neat profit of 15,000 rupees per 10 grams. Well, gold has seen support from geopolitical tensions from Russia, Ukraine to Iran, Syria, Israel, Hamas, and even China, Taiwan tensions. The global central bank buying has been a very supportive factor. We saw global central banks buy record 1136 tons in 2022, only to see further 1,037 tons in 2023. The first quarter of this year also has seen central bank buying on the stronger side. Even the RBI gold buying is at 817 tons as of now. And then there is short covering from funds, family houses, net inflows in ETF, and of course, expectations of rate cuts by US and Europe in June have been supportive. The physical investment buying from China and Asia has been on the stronger side as well. But who's buying so much gold that the gold prices can't stop? That is a bit of a conspiracy theory, really, because when you look at the gold market capitalization globally, it's at $15.6 trillion. It's not an easy market to manipulate. But this time, the experts tell us that they are at a loss of analyzing the one way that the gold prices are moving. So the expectation is that there's a lot of paper gold being bought as well. Remember, in India, when you buy gold ETF, it is backed by physical gold, but most other countries do not have this as mandatory. So that is still a developing story. But where is gold headed? Well, the gold targets set for the year end have been achieved already. But there are even higher targets being put out for the rest of this year and even in 2025. Citi says that they're expecting 2,300 to stay. ANZ says the same. Saxo Bank also has a target of 2,300. Exim Australia talks about 2,400. JP Morgan 2,500. And Bank of America is telling us that 2,500 to 2,600 is where the gold prices could go. In the Indian markets, Nirmal Bang talks about 2,400. IBJA 2,350. And HDFC Securities says that 2,400 is definitely coming. So, should you buy or sell at these levels? Well, India usually buys major chunk of its gold in physical form, and they have made good profits on that. Not many consumers are encashing gold at these levels as they expect higher highs. Jewelry buyers are exchanging old for new or buying as per their budget. Indian investors buy gold for longer period of time, and that while doesn't give them dividends or bonus, but it definitely is a good portfolio diversifier. So if you are looking at buying physical gold for longer term, well, just go ahead and buy it on dips. Sell your gold only if you need money. And if you are in trading gold, then shorts is still not a recommendation because the prices are moving and staying there. There is a bit of a correction and a caution that the street perhaps should be working at this point in time after this very, very strong run-up.
All right, you can watch out for more details on what's happening with the gold there on moneycontrol.com as well. But for now,